and we've taken me off of the payroll at the ATM company, and I became the real estate professional by investing in multifamily real estate, taking the depreciation for myself as a real estate professional, offsetting my wife's active income from the ATM company.
They might be thinking, well, maybe I want to sell my business. Maybe I've gotten to the point where it's truly a business where I can step away, someone could buy it and buy the entire portfolio, right? And you're selling the entity. Now you're faced with maybe some capital gains tax, right? And let's say you're selling the business for $10 million as a whole, and you're about to pay $2, $3, $4, $5 million of tax. I'm curious, Mike, what have you found, or what strategies have you looked at to be able to defer that capital gains tax? And what would that mean to you if you could, sell and defer the tax and even reinvest in another ATM business or other real estate or other things that you might want to do?
It's funny you say that. About 4 years ago, we started investing in multifamily real estate for a tax shelter, and we've taken me off of the payroll at the ATM company, and I became the real estate professional by investing in multifamily real estate, taking the depreciation for myself as a real estate professional, offsetting my wife's active income from the ATM company. So we've actually implemented that strategy quite readily, and it's worked out pretty well. I haven't paid federal income tax for 3 years. And we'll see when we get down the road of exiting the ATM company, if that alternative opportunity is still there, if there's other things I need to be doing to offset the capital gains of the sale.
So well said. By the way, that is brilliant, Mike. And if you didn't catch all of that, rewind that again. Some key facts there, okay? And when Mike's saying real estate professional, he doesn't necessarily mean he's selling real estate or he's a real estate licensed or anything like that. What it means is he's basically spending the majority of his time, at least 750 hours. There's a couple different things, but 750 hours is the minimum, and it's not on a payroll somewhere else. That opens up a window for him to become a real estate professional. But his wife is still working in the ATM business, right? And they have regular income coming from that. But because they're filing jointly, check with your CPA, he's able to depreciate the real estate that they bought. And that depreciation not only helps with the cash flow to offset on the real estate they own, but also the cash flow that they're making actively, or that she's making actively, right there. It is such a beautiful thing. By the way, you have bonus depreciation this year at 80%, 100% last year. So if you have assets to depreciate, you want to consider, at least if you're holding for the next 3 to 5 years. If you're selling anytime between 1 and 3 years, don't do that because it can come back and bite you. But if you're going to be holding for probably 3+ years, consider a cost segregation study, consider a real estate professional status, check with your CPA. Amazing, amazing stuff. If you want any help with that, you can go to capitalgainstaxsolutions.com. We have all the contacts and opportunities to help you with that. Now, Mike, I want to talk about the capital gains tax. This is the next part, right? When you depreciate, eventually you go to zero, right? You go to zero. So you're depreciating those assets, and eventually, when they go to zero, there's no more depreciation to offset over here, right? So guess what? We have a way to defer the capital gains tax on the sale of the business or the real estate. And then you put it into this trust, you can defer the tax, but then you can reinvest the proceeds, all tax deferred, into a new LLC that can reset your depreciation schedule, all tax deferred. Okay. So we call this the tax flow game. You have the tax flow game, not just the cash flow, it's about tax flow. And you rinse, wash, repeat. And so I'm curious, does any of that resonate with you?
I'm all ears. I'm listening. You are now the sensei, and I'm the student.
Absolutely. Well, I appreciate that. You go to capitalgainstaxsolutions.com. Anyone who wants to learn about that. But essentially, you have a business, primary home, investment real estate. We can eliminate the need for the 1031 exchange. We can move funds outside the taxable estate. You can diversify your wealth using something called a deferred sales trust. And we started out in real estate at a young age in the Bay Area, building houses with my mom and my dad, and we found that the 1031 wasn't always your friend, right? It could be your friend for a long time, but sometimes you have a low depreciation schedule, you have too much debt, you don't have enough liquidity, you have too much active time, and you want to be either retire or just diversify or just wait until an opportunity makes sense for you. And so what we offer is something called a deferred sales trust. Go to capitalgainstaxsolutions.com. It's kind of like the Netflix to the old Blockbuster that you're used to with the 1031. It's really, really amazing. Over close to 30-year track record now. Check it out, capitalgainstaxsolutions.com.